tries to change, even if I want to realize. 'Cause I've been sitting here, same old ways, taking off without the same mistake. Darling, where you going? It won't be as simple for you.
People, hanging tight. We're gonna pop in just a moment. Get some people in here. I'm gonna pop up my chat box. That's what I don't have. Start of the week. Well, not really. I mean, yesterday was, but technically, in terms of like the best trading day, Tuesday, Wednesday, Thursday tend to be those days. So start of the week. Preparation has been prepared. We've been prepared. Game plan has been prepped for. Let's get it. I don't have cream in my coffee today. I'm extra savage today. Extra savage today. No cream in my coffee. Let's go. Good morning again, my people. This is your boy, Social Heavy Center in here. On this beautiful, beautiful first of the month edition, November 1st, 2022. It is 60-something degrees outside. 68 degrees outside. Let's get it. So, oh, Sam popped in my chat box. Made me do that. Should have it right here. I don't think I ever texted it out of it yesterday, but I might have. I did. Okay, so let me just go ahead and fix that quick. It won't take me long. Chat box, chat box, chat box. As long as I'm logged into the right account originally. Let's get my computer turned off last night. I'm asleep. It updated. Pop out chat. There we go. Alright, cool. Now that we got that all said and done. Nice and bright. So, this order block's giving us some trouble. It's daily order block, right? This market has some love on it. Predominantly the high, the low. Oh, we'll mark the high at that. The low could be support for now. So we'll mark that with green. show you the area. 4 hour 2 is also an order block right there in the same level. Right here. We'll go ahead and mark that one as just a box. So this is my predominant wave count here. I think we're in a 4. It'll be pretty complex, pretty difficult to understand once we get in the middle of it. Once it starts getting closer to the end, I think I'll be able to more confidently say when that we are more likely in 5. Technically, the rules of central wave compatibility and stuff like that, you would anticipate wave 4 of the same degree of 3 to at least correct for 1/3 of time or 1/3 of price, if not both. That's a requirement. So 1/3 of time or price, if not both. So 1/3 of price at times right here. This vertical, this enters basically this enters box right here. 1/3 of price is this box right here. Notice that we haven't hit that in either direction. So this low that we currently made, I don't think is going to poise for the actual move that we are looking for 5. I think we're in the middle of 4. I think this is either the first leg of 4 being A, or we're currently, yeah, I think it's all A. There could be a possibility where this is like a word flat in here, like this A, B, C. But to me, this move here seemed pretty impulsive, and this is the style and the way it. Yeah, it's 5 waves. 1, 2, 3, 4, 5. So, and I counted this as 5. 1, 2, 3, 4, 5. A, B, C, 3 waves. 5, 3, 5. So that's 3 waves, right? Right, 3 waves. So this has to be either A, or I guess you could consider it maybe a 1 if it's you think it's gonna be like a leading diagonal, but I don't think it'll be leading diagonal at this point, because if it's going to be a wave 4 of this degree, we'd expect it to find a low point. It's probably somewhere in this box, or just below this here. And to me, if it was going to be a 5, 3, 5, that requires it to become a zigzag, and I think that would get us just a little too low. Rule of alteration states if 2 is sideways, 4 will most likely be a zigzag, or not zigzag, sharp. That doesn't necessarily mean in terms of how deep the correction was, because notice how this 2 compared to this 1, it took up a lot of time, went very sideways, right? But the price correction percentage is actually like 68%, if I'm not mistaken, or more. Yeah, 68%. Well, just above. Technically, the rule is any correction below 68% is considered sharp, but indefinite. I mean, well, that's what that's what you start considering it a zigzag rather than a flat. But this, I said this one very sideways. And notice how this B wave, this is a very telltale sign right here. Your B wave cannot retrace more than 78% of your initial A wave if it's going to be considered a zigzag, a true zigzag. And notice how this retraced 100% of A wave. So this is a sideways correction, even though it encompasses a 68% retrace level. So what's that mean is if 4 is going to be truly, I guess it could be a zigzag. It makes sense here, actually. Thinking about that, because you'd anticipate if it's gonna be a zigzag, 5, 3, 5, or 3, 3, 3, 5. It's just the way this reaction here looks. It looks like either the end. This is A, B, C here, and then it comes like this. That's my preferred count here. like this, and this box is the estimated time we have. And the structure here just looks like kind of like an impulse. So I'm one to say we are in a B wave, especially it's getting like this. I think initially this is going to be a pretty decent short setup. This is like 1, 2, 3, 4 retraces into the same territory. All like threes. It's 3. This is 3. This seems like a 3, 3. You know, all threes. Overlapping. Could be just WXYZ. Depending on how well it channels. Channels decently, not amazingly. So, for just the gist of it in terms of Elliott Wave, because I don't want to really talk about analysis. I want to talk about more trading here and setups and entries and stuff like that. In terms of analysis, we know we have to understand this is where Elliott Wave kind of helps you and kind of gives you a game plan. Because we're in a 4, so that means if I'm assuming we're in a 4, we're assuming that any low point made that could be a potential really good buy. But also with the understanding that we have to be very keen on taking profits at very specific levels, because if it's a corrective phase, you should anticipate it being really back and forth, very wishy and washy, just like wave 2 was down here. You know, went back and forth. It went from the low to the high to the low, back to the breaking to the high point, right? So this would be a very similar aspect, you know, but it might be just taking a little bit different of a structure. So we have to be very understanding of that aspect. So with that, I want to talk about possible trading. Because we understand that in the near term, until we make a low point, because I don't believe this low point is the low we need, because we haven't corrected it in enough time. Yes, we made a three-way structure, but time says we need to make a low point here, and price says we need to go to at least here. At least one of them has to be made. We didn't make a low point here, and price hasn't hit that point. So to me, there's not enough complexity has arrived. So at a bare minimum, we should anticipate any high point is a sell point to a low point. That's the idea, right? But we have to be keen that once these lows break, we have to take profit. We can't just expect it to keep running forever, because that's not the idea. The idea is that this is a 4, and once liquidity is filled to a point, we will come and break the high point. The reason why markets retrace is because it needs more energy, needs more power, needs more upkeep, needs more liquidity to keep it going. And the way it does that, it searches for voids in price where orders were never picked up, and it goes chasing those voids in price and picks up the orders in order to balance out the price, and thus fulfilling the liquidity needed to go venture on more price. So let's just do some very simple things here. I created this little indicator, which kind of helped me out a lot in terms of this understanding entries. It's got me in a few really good trades. I mean, it took me a small, could have been a good trade yesterday, but I had to enter it with basically a break even because the price came back at me. And I noticed it was developing like that when it's just Elliott Wave kind of told me that, so I knew I should have took profit. But I wanted to trust that setup a little bit more. But as soon as we started getting it back into that area, I knew that we weren't really rejected the way I wanted to pull it. So it's small, minimal gain here. So essentially what we're looking for are just swings, swing highs, swing lows. And our bias is, it shouldn't be anticipating upward bias, because our most recent swing high was broken high upwards. So we're anticipating at some point we will be buying a low. Unfortunately, in this area, there's really no points of interest minus the daily levels, like daily lows, and maybe the bottom of this order block on our daily level. There's no liquidity voids or anything in this level that scream for me to really eye under daily level. Minus probably, just like I said, the bottom of this order block here. So order block is this down counter broke this swing high. Although it didn't break it a lot, it did break this swing high and also broke this swing as well. So I broke too high, so I'm anticipating that, you know, structure's still bullish. We're anticipating structure's still bullish, bias is still bullish. It's noted by also our RSI is positive. Although again, I think we're going to correct a little more and come to the low side. The general consensus is we're bullish. Broke the high, so let's look for liquidity here on the 4 hour. Where does price want to go? We can see that on 4 hour that we're trending negative, so confidence that we're gonna at some point break lower to me is gonna be there until we fully reset, get down into these levels. That's when I think we'll fully reset, and then once we make like a regular divergence here like this, and once we get down into this box range down here is when we'll really anticipate a reversal. So right now I don't think a reversal is gonna happen. I think we're either into intermediate B. This could even be B, but I'm more the one to say we're still in a weird fucking like. And I took a short. I took a little short here. By the way, I like the structure here because this was a little void I noted yesterday. This liquidity void here is on this 4 hour time frame. It was from this. Was it on 4 hour or 1 hour time frame? On the 1 hour time frame here, we broke all these swing lows, right? So there's a void from here to this high here. And I noted the 618 to the 786 from that void as this darker red or brighter red box as an area of interest for a short. Initially was a pretty good little scalp. I ended up having to close it on this move here because once it broke back over to 786 of this move, that's when I know that it's more likely not going to be a new trending move to the downside. Well, I would like to see get more confidence and break below 1580. Technically, structure is still down on the hourly. Since we broke, the most significant swing are these, and this is what we broke. Although these have been broken on the 15-minute time frame. Let's see what we're looking at here. Also, on the 15-minute time frame, we got a pretty aggressive sell candle here as well. Again, under 1580, get really confident that the head short took this level work out. And the reason why I took this as short here is my anticipation that just based on price structure, we broke a significant swing low. This was a very aggressive south side. This was very last 2 days ago. I guess, you know, just not very strong in terms of structure. Elliott wave says we could possibly be in a B wave still, but that's just trying to predict. This is his trading structure, and that's all I'm trying to do. I know basically what this helps me for like Elliott wave. I know that say if we go here like this, and I'll mark up the 78%. If we don't break down in a 5-way fashion or like an impulsive fashion, and we don't retrace this move in an adequate amount of time or structure, then I know that we're most likely in an A, an intermediate B, and then just gonna be a C. Then it's gonna come up here, a double top. This will be the actual trade we want to get on, and then I'll send it lower, playing a horrible game of wish and watch. Right. So basically, how you want to play these things, you want to pick a time frame you want to study. It's very simple. I want to release this indicator today. It's not a hard indicator to understand or get a hang of. Let's go to a different chart real quick, just so we can see price structure here. Well, it kind of looks like it's developing here, like a little lean diagonal. So I'm gonna be, again, that's why I'm kind of eyeing this area, because what could happen again if we hold a bullish retrace and do it in a structure where I don't believe we're gonna break down. Like say if we come here and like again retrace to a certain level up here, that makes me believe we're gonna not break this low. Hold that, like barely SFP this level here. It goes this, come back here. Once it breaks this trend line here, I know that short is wrong, and that this is gonna come and break this high. We need to break this low here in less time than it took to create to be correct in this idea. And that's an Elliott wave structure, so that's an Elliott wave rule, an idea. That's just engaging if that short I took here is gonna be good or not. And again, It's all based on this simple structure. So you want to have no bias. You want to have overlying bias, like your daily bias. You also want to try to only take trades during like optimal trading times with like institutional trader flow, which is like during NYC open, close, London open, London close. Not really Asian. Asian's kind of choppy. And the idea is that when you enter your trades in those time frames, you're entering it in time frames where big money is also stepping into the game as well, because they don't trade all day. They can't trade all day, right? Decent setup here, but again, this kind of looks like a three-way pattern here. Looks like 1, 2, 3, 4, 5, but we'll see how this develops. Again, this is very simple. Once you break a swing high, you anticipate that's where the trend goes. That's where the trend goes. So, like, say yesterday, I took a little. I should have closed the short later, but I was not that short, long up here. But I closed it when we broke down here, anticipating that short I took was going to play out better. But it didn't, obviously. So I need to work on taking profit and better levels and on high points and low points rather than anticipation of like breaks and non-breaks. So again, yesterday I was working this 5-minute time frame after NYC. I was eyeing these local highs. Cause I anticipated, like, at first I saw this like a three-way pattern, like, okay, it's gonna rally up here. And that's what I drew out yesterday. And that's what started playing out. Once we broke the swing high, it's very, or was it this swing high here? Once we broke the swing high, I started eyeing this level and just started just studying it. I noticed this gap got filled, and then price again went higher. So then I looked at this order block. I found an entry at this order block. Broke a swing high. I wish I would have took profit here, but I ended up taking it like in here because like once this broke down, I thought this was gonna reverse completely. Just based on the Elliott wave, but we obviously didn't. So, but it's so super easy. Once that swing high, swing low gets broken, all you do is look for a liquidity void to get filled, and then also an order block that's near that area. Because price is going to want to fill that liquidity before it's going to be able to take off and continue the trend. Not all gaps get filled, and also I will say that, and also the gaps that do get filled, they don't always necessarily have to hold for the significant low or turning point. So, meaning, like, here's a good one, for example. So, in this example here, we have a breakaway on a high point, right? So, most traders, most retail traders are going to buy into this and get FOMO in, right? They're going to FOMO in, they're going to set their stop somewhere right here. Right? That's their stop, right? That's literally what their trade is. They buy in here, set their stop somewhere down here, even right here, and that's what happens. And then big money comes in, they see that, take that trade, they come and fill that liquidity, right? So here's a void right there. Here's a gap right there. And notice how it gets filled, but then it breaks lower. But notice how when it breaks lower, it lands right in this order block. And notice how the order block is what actually holds us. So price is going to want to fill those gaps, but price will more likely find its reversal at a order block that's very closely tied into or related to that move that gap is in. Usually the order block that plays out is the starting point of the move that has a gap inside of it. So that's basically the premise of how simple it is. And like this is a perfect example this morning. So here's a low, break that low. Where's a gap? Right here. One may argue here, but you take the previous candle and the preceding candle. Take the high and the low, or the low and high, depending on the situation, and that's your gap. And look how price comes here and respects it. And the trade is simple. How you would actually set it up is you would enter somewhere in here. You'd zoom in, look for a rejection handle like probably you at least want a low to be broken. So you probably wouldn't get into probably one of these candles, honestly. But I'll tell you what. I think it's gonna end up being an impulse. Elliott wave structure says this looks like a 5-wave impulse. I might take a stab as well on a hedged long here. You can cut it at the low of here at 1570. I'm gonna go half the size as the short was, and I will add if we break the high here, which is essentially my stop and my short. So half lot, full lot, half lot. We'll cut here. We'll cut here. So what was I saying on an example? Oh yeah, on an example. So the trade setups are simple and easy. All you're looking for are the target is the previous swing low or swing high. That's what your target is. So you set yourself up appropriately in that manner. So like, say on this candle, like that would be a good entry here, right? That's a good sell candle. You set yourself with that, and you set up for a 3-to-1. So that technically would have been a closeout. I should have closed out, but we didn't have an order to close. Perfect 3-0 target right there. That's kind of funny. I didn't notice that. That's just the premise. Search for target below the previous swing low. Try to aim for a 3-to-1 at a minimum.
Hard for me to
So again here we broke a low, right? So if price could get over this area, then we would have to probably pull the short. We don't even have to even go by this. Okay, price is gonna want to fill this, but will it accept price going over? That's the thing. It's going to want to fill that area. It's going to want to go like this. We have to pay attention to this order block too. It's going to want to poise for a decent. And this actually filled a void down here that never got filled. Right in this order block. Over this hip, that's when we considers a 3-way pattern, ABC, and that should confirm this being an impulse. As of right now, we're not sure. This is the issue with trading corrections. Really, it's really hard to distinguish. For now, what I'm really thinking is A, B, C. We're just gonna want to take these highs out right here. Notice how this high really tried to take that high up, and there it could not do it. I think price really wants to take these highs out before this low. These lows get taken out again. But we'll see. That's the anticipation here. Eventual target is this low here. This order block right here. Last down candle before an up move. This will hold for a pretty decent bounce. This seems like a 3-way pattern to me. 5, 3, 5. It's just very rare that C ends like this. Usually you get a divergence in C. Do we have a divergence? We actually do. Never mind. There is a divergence here. But usually you can kind of break down C a little better. And you can't really do that on this time frame. Coffee without creamer is tough. But I will say, it does make sense because usually you anticipate if A is complex, B is going to be either very complex with A and take the same amount of time, or it's going to be very simple with C and take about the same time as C. And we notice that if this is truly an ABC, which it kind of looks like it, right? These take very similar amounts of time. And A was very drastically difficult, right? It could be a weird possibility this is a 1, 2, 1, 2, but this 2 is taking so much time. It's taking too much time against its quote-unquote bigger sister wave, and thus we have to validate that. There's no way we could go with that. So I reckon the most logical idea is a 5, 3, 5. Because this is like a weird ass lead diagonal that's formed up here. 1 through 5 like this. These highs, are those local highs? Levels. Good morning, Chelsea. So yeah, that's actually a daily high. This is a different chart. I haven't used it low. So we bounce off. If we start trading below daily open, I'll be confident on holding it as short. But the longer we stay up right here, the more I'm gonna want to probably add to this long, because again, I took a short here in the early morning. With anticipation that this had a chance of breaking down. Just not based on the elite wave at all. That was just simply based on this price action and structure. And starting the 15-minute time frame and seeing that we broke a swing low, and all I did was target an area of liquidity void, which was right here. Look for a breakdown. Once it started breaking down, I took a short. Whether or not that will work or not, we don't know yet. Because this structure here kind of like makes me weary. Like the time frame of this correction here, this move here, and this seems very like it's like a go impulse. It seems impulsive to me. So that's why I took a half lot hedge on this tap of this daily open. Start closing below daily open on a 15-minute time frame, or even a 5-minute time frame. I'll be one to cut it. But to me, this looks like a possible 1, 2, 3, 4, 5. So we'll see what happens when this break of this low here. My shorts are up 120%, and my half lot long is down 32%. So broke that low. Let's see if this ends up being a little weird ass. So I count 5 down. So if this is 5 down, then we end up retracing the entire thing. We know that this is a 5, 3, 5. This is like a 1, 2, 3, 4. Oh, actually no. That's not it. I think this high here is part of this move here. This is your first move. Like that. So if we break this high, we know that this is a 3-way move, and we're definitely gonna do that. At least come here. Here he opens poising for a pretty strong area of just with that order block, very significant level in terms of this PA. To me, I think price really wants to come down here before we take off to do anything. That makes no sense to me. So the void here is one also here. So a lot of sell pressure. The bigger the gaps, the more likely you are going to start cascading down. Some gaps still filling. So that's why I wasn't willing to cut the short, and was more willing to hedge along with a half a lot against it. If the short ends up playing out and we end up breaking these lows, that small loss in here would be non-existent. Let's look at Bitcoin real quick. This is what Bitcoin does not look as go to total. Oof. Very interesting price structure here. Damn, BNB. God. I don't know if you guys remember, but I said a long time ago that from this low point, I had an idea that BNB is going to break up here, and if we started trading above, I think you said 280, 283, we're going to not do this. That's what happened. Yeah, Soul makes me really think we're in a 4. When it's low on Soul. 1, 2, 3, 4, 5. This is could also just be this too. But I'm not. 1, 2, 3, 4, 5, and then that's 4, 5. But I like the other count better. To me, regardless, it just seems like we're in some sort of correction now, and we should come and test that lower area. It looks good on Soul too. I like that on Soul. Everything else looks like we're in that corrective phase. For again, we're not anticipating a full reversal to hit down these levels on the 4 hour. Tends to be where it's at. Unless it's like a complete bear trend, like in this area, it's a complete bear trend, right? But like in times of real bullish, like bullish zones, it's the area. If it's truly gonna be a bullish trend, we should bounce in this. Play some tunes, guys and girls. Go ahead and cut that for now. Long. If we get back over this level here at 1580, I'll reconsider. See how deep this retrace is, because that's 68%. Something I get it. Let's try 68%. So technically, this is actually not a bad area to anticipate a reversal, because it's truly going to be a reversal. But the reaction at the top so far is pretty aggressive. Only half lot, so not anything significant. This move came at what, 630? Dude, that makes sense to structure. That'd be crazy. looking very, very bearish. Sorry, I got a text. I forgot about FOMC, but yeah, it's pretty important. We usually poisoned for a lot of shit. Technically, it's still just an ABC correction, but it looks pretty shitty on Bitcoin. This looks like it's a weird ass not impulse for Bitcoin. Bitcoin looks a lot messier. Damn, son. That looks pretty bearish. This is Nas. This could also just be a 4 here as well. But that looks really aggressive. I won't want to say this. And that would be bearish for us. This structure on Nas is very complex and difficult to understand. My very first anticipation was this is going to be a B wave. That's going to be A, B, C. Which kind of shaping up into that in terms of like this complexity. Probably go like this. The idea is this is just like a weird ass WXY. Yeah, we should drop soon rather than later. I'm looking at some messages coming into Discord. This looks bearish, man. Not gonna lie. But we'll see. My Elliott wave makes me want to not believe that price action, but that looks pretty bearish too. It's the way it's setting up so far. Could even be like where this is like truncation, like this is 1, 2, 3, 4, this is 5, like super mega truncation, which that would be fucking mind-boggling. I couldn't really just say that off the bat. I wouldn't want to say that off the bat. Looking pretty bearish. Retracing this low. We're in that area of the order block that if we're gonna turn it, we'll be in this order block. If we break below. I got more confidence under this level, but below 1557, this is really hitting the dust, and we're cooking down all the way down to 1481. Well, this should go lower technically based on price action rules. Man, I wish I had creamer in my coffee. This shit tastes like booty hole. Very significant level right there. But again, you guys, like, my Elliott wave says this looks like 5 up here. This is the ABC. We retrace into a healthy level. I wouldn't be surprised if we stay here like this. At all. I would not. At all. I would not be surprised if this happens. Now this was set up there with killer. It just didn't go all the way to. Well, it hit the 3-1, which is pretty impressive. That's what I need to get better on. I need to get better on actually. Instead of just entering with the level, like the amount I'm usually trade with, I need to really focus on the spread like that, the 3-1 R and stuff like that. Because that could have been a. That's all you would have needed. But sometimes you get married to the idea and like married to structure, and you see like price wants to go somewhere, or like you think your price wants to go somewhere, and you get married to the idea rather than just setting yourself up in an appropriate manner where you would close out here because you know that's where 3-1 R hit. So just be when you trade off structures like that, you have to really be mindful of that. Oh. Is there anything anybody wants to see? Let's see here. Yeah, Bitcoin makes me believe that if we do break high, like I just pointed out on Ethereum, that this is gonna be a sell. Like that's too. These are too aggressive. If we hold this low, it's gonna end up being a lower high than probably that one for sure. It might break this one, but I would not be surprised if it doesn't. It'll definitely break this one. Watch this being all chopped soup until tomorrow FOMC, and then this breaks down violently. Or like this being all chopped soup, FOMC breaks up and then breaks down. Maybe not that far, but like at least to here. Bitcoin does not look as healthy as the rest of the market. I will say that. Yes, we're trending above this range, kind of, but like the fact that we're still kind of pressed against it, makes you worried. I mean, as long as wave 3 is not the shortest, technically we're fine. But I don't really like it for a 3. 1, 2, 2. 1, 2, 3, 4, 5. I mean, technically, it could, I guess it could be. So we hit a greater than 1 to 1. So that means that if it's really going to be a breakout, then this is totally fine as long as we stay up here. But it just doesn't look as healthy. So be mindful of that. What I'm thinking is just at a bare minimum, we're going to do like this weird ass shit right here. This movement here, though, see if any coins have some good setups here on longs. Intraday long. It's all like it's pretty difficult price action in terms of follow through right now. Yesterday was a solid follow through. Yesterday had a decent at the beginning. The long had a good follow through yesterday. That's about it. Today might just be more of this down than up, chase the liquidity and then come back down. Alleyway says we should do this. This looks like 1, 2, 3. Taking too much time to break down against this, so you'd assume that this is a start of a different degree move, which in this case would be a B wave. Could be like a weird 1, 2, 3 and breakout, but I don't see that. So I'm thinking we're in a B wave. We're in a B wave. Okay, this would be A, B, C. This will be a pretty good setup if we get it. I'm not sure what happens though. Obviously, we're never really sure. I will see. Ugh. Yeah, I think we're in a 4 on Ethereum. On a wall and everything. And what happened beyond that? No idea. Man, oh man. Alright. Any requests or anything? Oh, shoot. My message board is gone. Where'd it go? Oh, right there. Damn, son. This order block's holding us, giving us life. Get over this level, I'll start thinking, okay, maybe I was right. Maybe I am right. Is this ABC or it's not ABC? This looks like an impulse, right? Am I crazy? We will see, friends. But yeah, any requests or anything like that? Let's see here. Let's go to the general chat in our area. See what happens. Anything here? What price? Game plan, if we get it, short a break of these highs. It'd be pretty, well, at that point, it would be pretty scary because everybody's going to be like, oh, breakout. But, that's game plan. Especially as this how choppy and long as it's taking. Just drops like this, I think is going to end up being a good trade. It's kind of difficult in here. Work around and stuff like that. Let's put some tunes on. Dude, this coffee is atrocious. Gosh, damn. It's just because I forgot my damn my creamer. Forgot my damn creamer. Man, it's disgusting. Oh. I'm gonna pour some of this freaking syrup in it. See what the fuck happens. Oh, that is brutal. Man, whoever people who drink black coffee are savages. Oh man, God, how do y'all do that? Gosh. Over 1582, I think. Where this ABC plays out right now, I'm not really sure. I'm still holding on to that short I took this morning. That's my fault. I didn't get on exactly at 6:30. I'm at 6. That's my fault. I should have gotten exactly at 6. If you don't believe me, I'm gonna post that setup this trade. Like I said, I had a long hedge open that I closed for like a 20%, 18% P&L loss. Currently still holding that shorts and it's at 100 right now. That's really not a lot, so I don't get happy until I get like 200. That's when I start like getting happy with my take home, my win. Oh, I know, dude. That crazy shit with that guy who, dude, yeah, that's nuts. Damn, son. This is right as fuck. Old ass chart. What's that other one? Hold on. I swear I had a different one. Hold on. Here it was. Old, because I haven't updated in a while. Holy shit. Estimated time for this move to end. Very peculiar price structure. Seems like a diagonal here. This looks like a possible A three-wave B, and I want a C wave. Regardless of the fact that the matter here, a few things to make note of in terms of just those highs are going to want to get them out for sure. This is a order block here as well. This entire range here. That entire range right there is an order block. Bearish order block. Right there. Based on this price structure, I think this is 1, 2, all this is 3, this is a 4, we're in a 5. That's my belief. So now this final move. What do we see here? So 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So 1, 2. So let's go through the things we know. We know it's a 1, it's a 2. We could tell us by 1, 2, 1, 2. This is where it's starting to get really complex. We could definitely tell this is our 3 here. I still think we're possibly in. One, two. I think this is something like that. So this started here. That. One or two things. It's hard to tell if this is. I think it is. 1, 2, 3, 4. Because these corrections look, in terms of structure, it looks very similar. Not very similar, but like they look of the same degree. And wave 5 of 3 is the extension. Here's 4. And this weird ass triangle thing, and then 1, 2, 3, 4. As long as it didn't retrace into each other's zone. If we regain, if DXY regains 113, 114, then I'm pretty certain that we're in front of the high, which makes sense because again, I think we're gonna before Bitcoin and everything and Ethereum and stuff. The idea is that maybe not that, but they're on different, different time scales right there. So I don't know. Hold on. Let me get an understanding of this. Let's get an understanding to this. Hold on, I'm just trying to study something real quick, guys. You girls. Sash will hide. I'm trying to study this high in regards to our low currently made. Because that was a higher low as well, right? Pretty sure. I'm almost positive that was a higher low on Ethereum. But barely. Which, in this case, the same thing here. Bitcoin, this is going to start breaking down to here, but it's already started an uptrend. We didn't start breaking down to here. We didn't start uptrend. This could, I mean, this could be a possibility, as you know. Just trying to see what lies in store for us if we're to do this. Crazy dodge. Let's see here. Let's go back to. Let's just go to. I guess guys. So this is 1 day. This is 3 day. Okay. What I really like is ever since September the 7th, this has made a advance. It's a pretty good advance in terms of price action for that, and we didn't really do anything. We kind of stayed near this low. This created a significantly higher high. We didn't really make a significant lower low. This looks like it's about to be done. If we're gonna make another high, I think this is done. If not, we could be done because structures here are very overlap, very extended. But this seems like could possibly be down to this move, which again could be intermediate because depending on this area here, this could be 1, 2. This could all be 3, then like harsh 4, and then one more scan pump for a 5, but. For now, I'm just starting this area here. This looks like a potential close to top. What that could provide for us if we do break higher. And that was September 23rd. That'd be fucking wild, but it could be a possibility. Like I'm just saying, if we break this high, like logically you'd anticipate that same low on Bitcoin being broken, which would be this low. Do I believe that? No, but if it does happen, then I'll be like, what if this is like some wild, crazy truncating final fifth wave? That would be like extra. Well, in the near term, you know, I'll be kind of bearish. But after the completion of that final move, this was a straight rocket, like a fucking straight bat out of hell. Damn, this chart's old as fuck. Holy shit. I wonder what I was studying back then. I can't remember. That's funny. But yeah, man, I'd be wild, right? Because like I've been on the edge. Like, is this a 1 through 5 or is this a 8? See, who knows, right? We never really know until more price action unfolds after. But dude, that'd be fucking biblical. And that's the only reason I'm saying, like, I'm not saying this is what I think is gonna happen. Okay, guys, I'm just throwing up a hypothetical situation that might occur if DXY is indeed gonna break higher, like I have here, which looks like it. This looks like 1, down. We didn't break this low, which that to me that's the significant low we wanted to break in terms of structure to really get us like confident that this is going lower. This low here, this one even maybe, but we didn't even break that one. We equaled it, but we didn't break it. So I kind of thinking this is if we're gonna rally high and break that high, and if we do that, I mean it's on a daily level, so it could potentially cause Bitcoin to break down on that same daily level and at least attempt to break that low of what I'm depicting now as a potential 3 if this is gonna happen. But in terms of DXY, it looks very, very likely that it's closer to the top than not, based on everything that I have studied from this point. I mean, if you just look at what's wild, I wish I would have traded this a little bit more. I was so heavily invested in crypto, which is fine, but I would have made a fucking killing because, dude, after we made, I wish I had the charts to like pull back up, but I just remember when this first happened, it's like when I first started really getting into it, I was like, I think this is a 5 ways down, and they started developing, and I was like, dude, this is a fucking ABC, bro. Like, this is a long time ago. Like, this is a fucking ABC. And I was like, dude, this is going to be a 1 through 5 going to develop. And that's why I drew that order block, and fucking that's what happened. But that's before, like, this. Like, I didn't really start getting, like, super confident in my Elliott wave until, like, 1920. But now I have to trust it. Especially my higher time from Elliott waves tend to be fucking pretty spot on, and I have to really trust my higher degree time frame Elliott wave analysis. So that's why I'm kind of trusting this. This here is kind of tricky. 1 2 1 2 3 4 5 4 5. I mean it just depends on how you count this little tick right here, that little move down right there that breaks that low. Do you consider that part of this? 1 2 3 4 5, and this is 1 2 3 4 5. This is 1 2, and all this is 3, and then 4, and then 5. Or do you consider that break 1 2, and then 3 4, 5, 1 2 3 4 5, I don't know, something like that. I don't know. To me, the more logical one is considering this, making this a 1, and this is a 2. But I don't know. Very hard to tell, man. I'm trying to find. I used to have a chart that was way better, but oh well. Oh, here it is. This one was. This is my anticipation. We're into the giant fucking leading diagonal. Two things here. Let's just talk about the current moves from the top side to the downside, because that's what I'm kind of curious on. So erase all these numbers, layers, all this stuff. If we take this high from this high to this low side, to me these look more like a 3-way pattern from this high to here to this high to this low. Looks like a 3, followed by another 3, followed by what could kind of seem like a 5-way pattern. 1 2 3 4 5, and the extension here was 1 2 8 1 3 8 2 right there, which is a very that's what you look for in ABC. We bounced off it and are still holding that range. My anticipation initially was that we're going to be in a B wave for a while, and that low is going to be held. Ethereum makes me believe that I'm right on that, but Bitcoin still looks like it's lagging. Like something's wrong with it. So this is my initial interpretation that we're doing this. This is ABC, and this is ending up going to be an A followed by a B, then followed by a C that goes to this low side. B could do many other things. It could come up all the way up here. It could come. You can break the high even, but for now we anticipate simplicity, which is just here. Now that's my initial implication. Just because the extension here didn't seem too impulsive, and the structures leading from the top side to the downside seemed like 3-3-5 instead of 5-3-5. Instead of 5-3-5. Ethereum was the one that made me kind of look weary, but as time progressed, it's starting to look better. Where's my high time for Ethereum chart? Oh, here it is. So yeah, this is the camera here. ABC. This could have been 1, 2, 3, 4, and we're in 5, but this is taking too much time now for me to say that. There was a possibility that this could have been like a weird leading diagonal, and this is like 1, 2, 3, 4, 5. I could accept that. Just looking at it from this scale, and this is like an ABC rally. I could accept that, but for now, I'm not gonna agree with that. I'm gonna stick with my higher time frame analysis and try to run with it and hold my bias, because there's been too many times where I let the lower time frame bias seep in, or structures seep in, and it makes me lose out on a very good fruitful trade because I bailed on my original idea. I'm not trying to bail on my original idea right now until I have very logical reasons to do that. So from this low point, we have moved up, have retraced, but our retracement has happened in a manner where it makes me believe that we are in this intermediate B wave, and we're looking for an estimated high between end of this year to the end of quarter 1 next year. Quarter 2, middle of quarter 2, if this is true. That's what you'd estimate. So what I think will end up happening if that's true, it could just be an X wave as well. Let's do the X wave algo real quick. So I think that's where it starts. X wave actually would be here. So we already met the requirement for an X wave, so we're fine. In terms of time, all we have to do is break this high, and we can start looking for we can start anticipating a logical short, because time says that we have corrected enough in time, and structure says all we need is a three-way pattern to correct this current movement down. Thus concluding the correction. If we start trading below 1485 on a close, then I'm going to be more bearish. I'll say below 1485 I'm out, and I'm thinking we're going lower. So let's say we start trading below 1485. That breaks a swing low right there, or 1480. See that? That breaks a significant swing low. If we start closing below that swing low, I'm anticipating it'll just rally down like this. We have one right here. And one right here. That already got filled. So the one let's mark out the first one. This one's kind of a large one, so you wouldn't mark out the entire range because it's too large. You just mark out the midpoint, roughly right there. Take that away. This is the liquidity. This was a liquidity gap originally, so actually it was not. This actually was not. None here. None there. So this one right here. This one right here. From here to here. So price wants to go here, but it doesn't necessarily mean that we will go here. we shouldn't go here if we're gonna be bullish. Again, we're breaking swing highs. Here's a swing low, swing high, higher swing low, break a swing high, make a new swing high, swing low, new swing high, higher swing low, new swing high, higher swing low. As long as we don't close below, again, 1480, I don't think we're gonna fill this void on Ethereum. I think that Ethereum's doing this. End up being a 5. And this C, again, if C is truly going to be the way it's going to be. So in ABC, again, in ABC takes place in a very similar fashion, very particular fashion. Two waves will be a very similar time, one's going to be very different. Notice if this is A and this is B, notice how similar in time they are. So since they're so similar in time, you anticipate C being drastically different, either being very, very short, meaning only 1/3 of time, which would be right here. Oh, that's kind of funny. We're gonna hit that level precisely in the moment. We're gonna make a high point of 5. But we also have to make a requirement for price. This is too small of a price pressure. In order for me to say that C wave is done, we have to make a high point in this purple box, and as well as hitting 2,000. If we don't do that, then I'm more with the idea I'm about to show you guys. So I think what's going to happen is that this is going to go like this. Correct for 4. Roll for 5. Break that high. A, B, C. Create a new floor. Head and shoulder. Meme head and shoulders. Rocket. 3, 4, 5. And just capitulate. That's the idea. Oh, for the on the bear side, on the bull side, yeah. Here, this is an order block. This is a gap, liquidity gap here, right there. How do you know it's gap? Arrange, breakaway. Take the previous candle before the breakaway. Take the next candle after the breakaway. If the low and the high of those two candles aren't touching, or in the same, aren't like in each other, that's your gap. That's your gap. And then look what happened. On the next candle, we actually went into that gap and then sold lower. And then again, you have another gap. But again, not all gaps will be will work for entries. And not all gaps will get filled. But understanding this logic will get you a better understanding of price action and help you understand where you would want to get in. Where are the most logical places to get in based on price action. And basically the premise is, if you see gaps, you see price starting to stall. So like you say, so you get two breakaways, you see a gap here, and you see price starting to stall like this. Well, you anticipate like, well, since price is stalling, we're no longer breaking away, that we're losing momentum, we're losing the power. So how do we gain more power? Getting liquidity. Where's liquidity? In those voids. So price is gonna want to take those voids out. So in this scenario, you can start zooming in here and looking for bullish structures to target those liquidity voids, right? Because your understanding of price action is that if we have enough liquidity to move price will move rather quickly. But if we start to stall, make very small candles in a very choppy range, we know that price needs to chase liquidity in order to continue the prior trend, or chase liquidity and then search new price discovery and reverse the trend completely, right? So that's how you have to use the logic. Again, it won't necessarily be every single time it's going to be a perfect setup, or every single time it's going to work, every single like that. But it's going to give you an understanding of logic and understanding of, okay, like if we're stalling, where is liquidity lying? Where's price wanting to go? Where's wanting to go? Like right now, we're stalling, right? We're stalling. Where's price wanting to go? Well, on the daily time frame, there's not really a void of liquidity. One thing that is intriguing is this order block here on a daily level in this area. So you zoom in here. And especially since you start seeing it stall like this, zoom in, right? Zoom in on that candle. Find a cell structure to zoom in and get in on. Look at here. If we close like this, guys, if we close like this, our next candle will make a high. And if we, on the next candle, it closes, right? Say it closes. The next candle closes. We get a little high like this, little high, wick, whatever. I know this is a little wider than a normal candle, but just bear with me. We get a high, like a, you know, right? Well, guess what? Let's move this down. That is a gap, and that you could use that little area for a potential entry for a short. It's if we do this, make a little high, come here and rally up higher, you could enter there with a short, with stop here, targeting that area of liquidity, which is order block. Oh, shoot. Yeah, we were listening to this indicators today because I think it helps a lot with just visualizing where price wants to go. I know it helps me. I don't know why it does what it does. Like, it very easily makes me understand that we're in a downtrend or an uptrend. Like, I don't know why, but it does. Like, if we start breaking swing lows, look for liquidity and look for entries in that liquidity. It's not going to work every time, but it might work a lot more times than not. Start breaking swing highs. Like, for this instance, look, we broke that swing high. Look for an entry for, entry for long. Broke that swing high. Here's a bull candle. Look for stalling. Once it starts stalling, find a gap or find an order block to possibly enter on. There's not really an order block in this zone, but you have a gap here, right? So then, once price gets into that gap, you zoom in. You zoom in once price hits that area of interest, at least to the hourly, if not more, and look for some sort of confirmation, like a reversal candle, divergence on a lower time frame. Like, if you're gonna go into hourly, you most likely look for like a bullish engulfing candle or something like that. If you were to dive in, if you're using a 4-hour time frame, and you dive into the 15-minute time frame, what you'd use instead is the same type of concept we were using on the higher time frame. We're looking for the same concept. We're looking for a swing high to get broken. So on the we use that 4-hour time frame, zoom in on the 15-minute time frame, find the most local swing high. Once that local swing high gets broken, we know that we're more likely in an uptrend. Why? Because on the higher time frame, we did the same thing, broke a swing high, retraced into area of liquidity, and are seemingly doing the same thing on the lower time frame. So why wouldn't it cascade and continue on the required trend on a higher time frame, right? So once that lower time frame area gets filled, what do you do? You look for your areas of liquidity. Where are those? In your gaps and your order blocks. Mark your gaps out. Here's a gap. Here's a gap. And then you think continues. Breaks a high. Although you probably wouldn't be able to get in here because just not on a gap at least. This is an order block that you would possibly get in on. Say if you miss this. You miss this rally up, rally. Well, you don't chase this. Just wait for a pullback. Wait for one or two candles that aren't as aggressive. Don't enter on a bearish engulfing candle. So like, if this candle was gonna be like just straight take out like 3 of these candles lows, like you don't enter on that. But the fact that this candle is sold off, but like we didn't break any lows, right? So you know that's an order block potentially. What you wait for now is look at that swing high, and if that swing high gets broken, watch for that order block to hold on a retrace. Boom. You do that, and you can do the same thing, right? You can zoom in if you really want to, but And for me, I'll just enter on that order block, retest, and you target the next level higher. Boom. And there's sometimes where you get washed out, like in this area, probably get washed out a little bit. Right? Probably get washed out a little bit because you're anticipating a buyback. What you would do though, this would actually be a decent trade as well, because here's your last order block before you broke higher, right? And look where price ends up turning. Right in there. So that would have been a good trade if you just had the balls to take it, but taking profit would be pretty difficult. I wouldn't know where. Then same aspect here, broke a swing low, right? You find your gaps in the areas of liquidity. This is a pretty large gap. So when you have large gaps, you want to mark out your 0.5 to 0.786 levels, and that's where your area of interest are. So like, that's pretty large, so you mark your area like this. And initially, the first initial would have been good. Would have been stopped out right there, though. Would have been stopped out right there. And at this point, you know, you probably would wait and just see what happens, develops more. And then here, again, you probably would have got washed out a little bit. This ended up being a very complex, very complex little area. You wouldn't have gotten into a really good trade until potentially like here or here on this time frame. On the hourly time frame, the story was a little bit different. It looks a little bit more cleaner on the hourly time frame. So like this would have been a loss because you would have took that trade here. You would have waited because we didn't break a swing low. We had a new higher low, so you're like, okay, are we in a new uptrend? You break this swing high. You mark your areas of liquidity. This initial potential scalp would have been potentially good, but this ended up being a wash with two possible losses right there in a row, followed by a third. And then finally, you break a swing high. I know you break the swing low, but that's when you decide what bias you want to hold on to. This is where it helps to have a higher degree bias because when it gets into areas like this, because it's a very tight range, we broke a swing high, but then we broke a swing low. So like say you broke the swing high, so like you're anticipating bullish advances, so you mark out your liquidity zones, here's your gap, right? And then you break a swing low. Well, if your higher degree time frame, which we just did that, which was on an hourly time frame, said that we're breaking swing highs, so we're bullish, and even on this time frame, in that same little area that we're just studying, we broke a swing high before we broke swing lows. So, based on a higher degree bias, we should have been looking for only longs and ignoring that short setup, those short setups down here in this range. So that's why bias is very important on a high degree. Anyways. Thoughts on the East channel that I DM'd you? Let's go to again, what I need to work on now is perfecting my setups. I can very easily understand where price wants to go and stuff now. Now it's just like perfecting the setups, like really calculating the distance from stop placements, actually putting on the appropriate amount of position size. There's a lot of times where I enter, but I don't enter with enough position size because I'm just entering on what I'm used to, on like the amount I'm used to. And so I just always enter on that, no matter how big or like how small, how it is. And sometimes my trade will hit a 3-to-1, but my P&L or my profit level is not where I want it to be. But the trade hit because it hit a 3-to-1 in terms of the setup, but I didn't do it appropriately because I didn't calculate the position size appropriately. And that's what I need to really work on. That's what once I get that, I think it's game over for us. Let's look at this. So you're on a 15-minute time frame. The low is 1240, the high is 700. Your low is 1240, and your high is 1700. FTX. So yeah, the way I see this structure is one, two, 1, 2, 3, 4, 5, 3, 4, 5. Typically, your wave 4 of a lower degree shit, bro, I don't know. Hold on. Yeah, I think they're just random ass songs on SoundCloud, dude. I have no idea who this is. Because I can't really play real music on this because I get copyrighted. God, that was a rough coffee, not gonna lie, but I'm tweaking now, guys. Tweaking. Anyways, hold on, we'll find out that song right now, but typically your wave 3, this is textbook wave 4 right here, bro. I'm not gonna lie. This is where you want to look for a reversal for wave 4. It's going to be in your Bermuda Triangle. Remember that? Remember the Bermuda Triangle talk? I stopped talking about that as much because we stopped getting wave 3s a lot. We stopped just being a lot of corrections, so I stopped using it as much. But typically you look for this little area for a reversal. With this area being the best spot. You want your high point. We don't know a high side yet. But I would assume probably around there. So we can't anticipate wave 4 of this degree being done until one of two things. Price retraces here like this and bounces up and regains that area. Or we just do this. So we delete this. And again, the reason why I stopped doing that as much is because I started changing time and price a little better. And I see the price just needs to go to here. At time just needs to go to here. Which technically does the same kind of fiasco. Yeah, I wouldn't be surprised if this is what Ethereum does, man. That'd be fucking brutal, though. I'm not gonna lie. It all depends on what happens here. Break this low, then I'm more inclined to think it's gonna go like this. Well, actually, if you break this low, triangle. It could become a triangle. If you do this, it's probably gonna be like a weird flat like that. Or I guess it could become a zigzag depending on how far we go. If we can maintain a level below 1640 on a close, then it could become a zigzag, where this is A, this is a B, this is C, you get some here. But C has to be more aggressive than A in terms of the velocity and speed and where it goes and extension. At least a 1-to-1 or greater than A. So we got to that level we're just speaking of. Our target would be exactly where we already have anyway, so pretty good. But anyways. Very weird, complex, difficult price action here. So I'm gonna look at one thing only. Alright, so the way, like, you're not supposed to do Elliott wave on this lower time frame, so I'm just gonna get rid of that. But the longer we stay down here, this meandering around our day one open, the more likely this is gonna be do that. It's gonna be a 1, 2, 3, 4, and this is gonna be an extension. So this would end up being just like a weird, either, I don't think it's a B, and it's like a weird ass B, and then this is C. We'll see though, okay? Let's try to find that song, I guess, real quick. I'm just playing a random playlist. Damn, excuse me, guys. What the fuck? Come on over. It came right before this song. It's not badass, I'm not gonna lie. See, this song. Oh, this song. Both good songs, though. I could take them a little bit better. Remind me of Zed's Dead. Alright, friends. If you have any more last minute questions or concerns or charts we want to go over, that real quick. Damn, dude, what the hell happened? This random cough attack. Damn, dude. Out of nowhere. It's a random ass cough attack. Very annoying. Right, guys. What I need to focus on moving forward is just really getting on those setups, man. Seeing everything quite clearly. Just need to really focus on those setups. This little area kind of took me for a whirlwind, I'm not gonna lie. Kind of confused the shit out of me. I bought here, but then all this shit fucking, I was just so confused. I actually couldn't make sense of it. I should have trusted my gut. Yeah, this song's badass right here. This song's badass. Ooh, so good. Love that. Anyways, I think this is A, B, C. And this thing's about to fucking rock it. Yes. That is my belief. Let's see if we can trade it. Look, we have there's a big downtrend, right? We have this kind of like our little range here that formed, right? We got a low, got swept. Here's a swing high. We're breaking that swing high. If this candle closes like this, and we get another candle like this, watch the wick here. We'll get that will form a little gap, right? We want to enter here, but I like, dude. This is a good chart. 1, 2. It's a good chart. Look at this, dude. On Saturday time frame, range, gap. You want to point out your 0.5 to 786 in your gap, right? Let's mark that real quick. Here's your golden pocket of that area. Look where price ended up turning. Right in the golden pocket of that area. Gap partially filled. I'm going to be surprised if this is where it turns. I want to hit the 0.5. One thing I don't like. So if you're in a long on from down here or something, because that's what I called it on Dodge, don't be alarmed if this happens. Okay, because all it's doing is it needs this gap to be filled to be able to have price go. If at this point we don't know, it could fill it, it could not. But if we do this, understand that that's fine. As long as we hold this order block that pushed us up. So it'll basically be in the close of... that's not really a strong order block. I like this one. Right here. So that close would be 0.2124. Mark our order blocks in blue like that. Gaps in clear and red. So that's what I'm seeing for. Because this is the ABC here. A, B, truncation C here. For A, that A, B. Let's look at where the algo hit. I guarantee it hit exactly where it needs to. Not quite, but hit pretty good. Broke a swing high. It's a different degree for our time frame. Broke a swing high. Here's that gap. Wants to get filled. It's already got partially filled. So it's just looking like a really good continuation potential for Dodge. As long as we maintain certain levels, like I said. Momentum is negative on the 4 hour, daily probably positive as hell. Yep. Hourly broke negative. So if the hourly can get positive again, we can get confident in a potential bottom for this. But for now, I'm thinking rally for mid-term of the day. Go with the rest of the market. One more low. That's the actual move we want to be on. Makes sense for Bitcoin and ETH. That's the kind of idea we have. You know, rally up for the day. One more low. That's the low we want to be on. Oh God! Damn it! Damn! Jesus Christ! Ugh. All right. I think we need to get it up. I think we're about done here, guys and girls. Wrap it up. Been going for about an hour and a half, 2 hours. So I think we're good. Covered everything I think I needed to cover. I think we have a really high potential to rally to the 1620, 1640. We're looking for weakness in that area on Ethereum, and for that to send us lower, and looking for a buyback range between 1515 and 1480. With a sweep below 1480 being acceptable, but we must not start trading below 1480 on the close on the 1 hour time frame. Okay. Bitcoin in terms of setup and trades, looks less promising, more range bound, more stuck. So hopefully we'll see what happens once we get to this low point and create a new high. Yeah, I'm not liking Bitcoin, but we'll see what happens, man. Bitcoin looks very like potential top to top. That's why I think it's gonna be good to get on that short just in case we are wrong and this doesn't come back as a buyback. But again, that's I think that's trying to predict. We're not trying to predict. We're trying to trade what the chart's giving us. And if the chart breaks up higher and we see weakness in that area, then we're gonna look for that short. Seeing this down here. Because this is like a fucking like. What do we call it? Head and shoulders. Anyways. Yeah, that'll be it, my friends and family. I don't know if you have anything last minute to ask, but I think we're about good set up. I'll post charts and stuff. I'll also get this indicator out and rolling. I think it's going to be very beneficial to all of us. Well, everybody in the group. Just by visualizing the swing highs, swing lows more appropriately. Understanding bias more appropriately, stuff like that. Again, you want to try to enter trades and look for setups for a 3-to-1 R at New York opens, London open, New York close, and I guess London close. All the time frames you tend to be washed out. You enter with retail, your stop placements are at risk. Enter in those time frames, and you're more likely to have your stop placements kept safe. Okay, so. Yeah. With that, my friends, I'm going to play some music for a little bit and then roll out. And we'll wait for the last minute question. I'm going to use the restroom, come back and any more questions. And if there's not, then I'll get out here, right? It's a bad song. I have to restart it.
Like to run this time to your embrace. carries them has kept me astray. Too soon to act on it, can we ever be? That all depends on what you're feeling from me. Let me show you all the way. Let me show you all the ways. Oh, let me show you all the ways. Yeah, let me show you all the ways. That carries them has kept me astray. Too soon to act on it, can we ever be? That all depends on what you're feeling from me. Let me show you all the way. Let me show you all the ways. Oh, let me show you all the ways.
Alright, my friends, I'm gonna get out of here. Thank you all for tuning in. Appreciate y'all. The upload will be available on YouTube in like 30 minutes or less. So catch that if you want to catch any replays, whatever, blah blah yada yada. I'll get the link posted as well for the replay, and then I'll catch y'all probably tomorrow with Cobra. Try to join on with him. Alright, tomorrow should be fun. FOMC day. Be prepared. Mark out your levels. Mark out our levels. I think that's what's gonna happen. Rally to the level. We're gonna short the shit out of it to new levels. Bang, let's get it. Y'all be safe. Practice risk management. I'll go ahead and get more education stuff out regarding the gaps and all that stuff. More videos, stuff like that. More just like PDFs, just stuff you guys to study. Big thing. go back in time, use the replay button on different assets, and just practice it. Just practice over and over and over and over and over again. If you break a swing high, anticipate that swing. It's just basic price action, basic structure. That's all it is. All right. Until next time, it's been a pleasure. It's been your boy, Social Heavy. Peace the fuck out.